So in this recording, I'm going to look at this essay from the OCR paper, which was 2020 macroeconomics in the A-level paper. So this is looking at cutting corporation tax and income tax, and it's looking at cutting the top rate of income tax from 50% to 45%. And it's suggesting that this has reduced government tax revenue, reducing in the tax rate. So it's looking at whether or not this cutting direct taxes will always reduce tax revenue. So we could get started with a few sort of key terms and explanations. So income tax and corporation tax are both direct taxes. It's a question telling you it's direct tax, so it's not really going to be adding much by saying that, but it's useful just to take that on board. And they're direct taxes because they are imposed directly on income. They're a direct discretionary tax. When you change them, it's a discretionary tax as opposed to an automatic stabiliser, and it's an expansionary fiscal policy because you're cutting the tax, you're giving people more money, and they're more likely to spend. It's also a progressive tax. Income tax is a progressive tax because you're taxing higher income earners a bigger percentage. So it's in total they're going to be paying a bigger percentage of their income than lower income earners. So that's a progressive tax. Now the whole question really is focused upon a concept known as the Laffer curve. And that is really what they're wanting you to write about. The mark scheme pretty much just talks about the Laffer curve. You can talk about other things as well, but you're not going to have such good arguments if you do. So the Laffer curve is showing the relationship between tax revenue and tax rates. Now, you also have to watch out with this question because a lot of the questions are talking about the impact on the macroeconomy. And it's very tempting to talk about how this is going to impact inflation, unemployment, etc. Don't do that. You've got to keep focused on tax revenue. That is the key concept, the tax revenue, and what is happening to tax revenue when tax rates change. So which side of the argument will you start with? Now, normally, you would probably start with what the question is asking you. So a cut in tax rates leads to a cut in tax revenue, and you'd explain why a cut in tax rate leads to a cut in tax revenue. And you can do it that way round, but it's going to work better for this question if you go the other way round, where you talk about why a cut in tax rate might actually lead to an increase in tax revenue. And the reason for that is because you can then critique your arguments that you've given. If you do it the way around in the question, it limits what you can say for evaluation. So it's better to work the other way around. Now, an important point to note, which is relevant for all questions and for all exam boards, is that whichever argument you do first, that's going to be your analysis. So even if the mark scheme does it the opposite way round, you will still be marked for your first argument as analysis, and your second, your other side, will be evaluation. So it doesn't matter which way round you go. So if we look at the analysis, we need to look at this Laffer curve. So the Laffer curve is showing us that as the tax rate goes up from 0 and goes up to B, the tax revenue increases. Keep going up to A, tax revenue still goes up. But then you get to this point A, this is a turning point, sometimes known as the optimal tax rate. And what happens is if you keep putting the tax rate up further, your tax revenue is actually going to fall. So if you put your tax rate up further, the tax revenue is going to fall. And this is what the Laffer curve is showing, and this is what we're going to be looking at in this essay. Although the essay isn't talking about increasing tax rate, it's actually talking about decreasing tax rate. So that's what you've got to watch out for, and that's what makes this quite difficult, because all the textbooks talk about the Laffer curve saying as you increase tax beyond point A, you're actually going to decrease tax revenue. So it just makes it a little bit more difficult. So as it says here, the Laffer curve is normally used to explain that as tax rate increases above the optimal, then you're going to lead to an increase in tax revenue. So what we're doing in this question, we're looking at the opposite. So tax rate falls from, we're going to look at tax rate falling from C the high rate of C to a lower rate of A, and explain why, as the tax rate falls from that high rate of C to a lower rate of A, that's going to lead to an increase in tax revenue. Now, the question is actually giving us numbers, so we could put numbers here. Obviously, this diagram isn't drawn to scale, but that's going to be 50, and that there is going to be 45. So we're going from 50% to 45%, and that's leading to an increase in tax revenue. So we need to look at why that is the case. So this is going to be our analysis. And we've got quite a few different reasons. Now, you won't write about all of these, because if you write about all of them and you do a couple of sentences on each, that isn't going to give you very good analysis. You're better off picking maybe 2 or 3 and going into quite a lot of detail. So expanding on them, exploring different things that you can with each of these points, but going into more detail rather than just making bullet points or a bullet point and a sentence. So you have to think about going into detail. So we're going to be explaining the reasons why tax revenue will increase when tax rate falls from a high rate. And that's the key thing here. We're falling from a high rate. We're falling from 50%. That's a high rate of income tax. We're falling to still quite a high rate of 45%. So we're falling from a high rate. So first of all, there's increased incentives for people to take a job. So you will have people that are not working. Perhaps their partner is working. They're looking after the kids. And it's going to increase their incentive to go to work, because less of their money is going to go in tax. If people are staying at home looking after the kids, when they go to work, they're going to have to pay for childcare. And if they've taxed at a very high rate, by the time they've been taxed, paid for childcare, it might not feel worthwhile actually going to work. So lowering the tax rate means people will be incentivized to take a job. Similarly, people might have an increased incentive to work longer hours. So then if they're asked to do overtime, they might think, well, we'll do the overtime now because we're not being taxed as much. Or they might be incentivized to take promotions that they wouldn't otherwise have been interested in taking, because with the promotion comes a pay rise, but if the tax rate is high, you don't see as much of that pay rise. Probably less tax evasion. When tax rates are high, you're going to get more tax evasion. So people either not declaring any of their income, or those people that are working for themselves, their own businesses, either not declaring any of their income or not declaring all of their income. So when the tax rate is high, you're going to get more of that happening. If the tax rate is reduced, then people are more inclined to be honest about what they're earning, because if they're caught out for tax evasion, then there's going to be high fines. At a higher tax rate, it's worth taking the risk, some people may feel. Workers are less likely to move abroad to work under a lower tax rate. So some countries will have 0 tax rates, although you might not necessarily be able to move there because you might not be able to get a job. But other countries might have lower tax rates. People are less likely to move abroad if the tax rate in their own country is more acceptable. Coupled with that, workers from other countries are more likely to move to the UK. So if we have very, very high tax rates, workers from other countries may well not move to the UK. If the tax rate is lowered, it might incentivise them to move to the UK. And obviously if they move to the UK, then they are going to be working and earning and paying tax. So what we need to do with all of these points, we need to think about how this is going to increase tax revenue. So I've just gone through the points and I've not really talked about how they're going to increase tax revenue. You need to make sure with each of these points you explain, even though it seems obvious, you explain why tax revenue would increase. It might seem obvious, but that's all part of the analysis. It's all part of what we call the chains of reasoning. So try and explain how that is going to link in with higher tax revenue. Then we've got the evaluation. Now, not all essays, you don't always follow the same system with essays, and that's why essays can be difficult, because it's not that there's no one formula that works for all of them. Now, for this question, what you could do is you could, if you knew a lot about the Laffer curve, you could perhaps criticise the Laffer curve, and your evaluation could be talking about why, what's wrong with the Laffer curve. But I think that's quite difficult. Alternatively, you could explain why reducing tax rate would reduce revenue. So if you think about the diagram at the start, you're moving from A down to B. So reducing tax rate will reduce tax revenue if you're at the top of the curve and you move down the curve. Or, which I think works best for this one, critique the points that you wrote about in the analysis. There were about 5 or 6 points that I gave you. What you could do is go through each of those and say why that might not be the case, or it depends on. You could do that in 2 ways. You could either do all of your analysis and then do all your evaluation, or you can make your point and then criticise it. That's probably the better way for this question, because all the points are kind of separate points. Apart from the last 2 about people moving abroad and people moving to the UK, they're all separate points. There's not any overlap. So it probably makes sense to make your point and then evaluate it, because that way you're evaluating as you go. And if you run out of time, at least you've got some evaluation done. So let's have a look at critiquing some of those points. Again, you've got to make sure you've sort of got your focus on tax revenue. So the first point was about people more likely to take a job. Well, what if there's no jobs available? Or maybe the workers don't have the right skills. It could be that somebody's been looking after their kids for 5 or 6 years, stayed at home, and maybe they were working in IT, for example, and now they don't have the required skills for the jobs nowadays. So it's not just as simple as the tax rate's gone down, I'm going to go and get a job now. People might not be able to get a job. If unemployment is very low, then it makes it even harder. So it might be that there's not the jobs available. It might not be possible to work more hours. So I might want to work more hours, but my employer might not be able to give me more hours. And that's going to be the case in a lot of full-time jobs. There might not be overtime available. They might not pay extra for overtime. And it might not be possible to change your hours. And that's going to be the case a lot of the time, that you can't change your hours. So just because income tax has fallen, I'm not going to be able to work any more hours because they're not available. I'm already working full time and they don't do overtime. Will 5% make much of a difference? So we're talking about evading tax. This was the evading tax point. If you reduce the tax rate by 5%, is that going to make people change their behaviour? They're probably still going to, if they're already evading tax, then they're probably just going to carry on doing what they were doing. They're probably not going to change their behaviour. So the 5% probably won't make that much difference. Will workers really move back if the income tax changes? And will 5% be enough to stop workers from moving abroad? Probably won't make that much difference. What is actually probably more likely to make a difference when people are thinking about moving abroad is the actual amount that they earn. So if the wages in another country are higher, then it might not be that the income tax cut is going to make much difference. They're still going to move for the job abroad if the wages are higher and the tax rates are lower as well. And then finally, you need to think about your judgment. The judgment, sometimes called a conclusion, needs to add something new. So don't just do a summary of what you've already done. You need to add something new to your answer. You might think about saving something that you could have written about in the analysis or evaluation, and use that as a kind of overall judgment, sort of weighing up actually what's more important is not any of these things, but this final point I'm making. And you need to make sure you keep your answer focused on tax revenue. So continually refer back to tax revenue throughout your whole answer, but also in the judgment at the end. And also you've got to explain your judgment. So don't just say, I think this is more important, full stop, but elaborate on it. So for this question, here are a few suggestions for your judgment. So possibly the first one might be a good one to go for. So it depends on the position on the Laffer curve. So the top part, A, is the optimal tax rate. If you reduce your tax rate below A, then you're actually going to reduce your tax revenue. So it depends. Whereas if you're at point C and you reduce it, you're going to increase the tax revenue. So you're going to get different things happening depending upon where you are on the Laffer curve. So if we're reducing our top rate of income tax, so 50% to 45%, that's going to perhaps have a different impact if you're reducing the lower rate, maybe from 20% to 15%. Second point you could do as an alternative might be how long the reduction is expected to be for. We already know that it's only 5%, but we're not told is this a short-term reduction. It could just be a short-term reduction, in which case it's not going to be much impact. And then the final point is cutting tax might actually mean people work fewer hours. So once you have a lower tax rate, it means you're going to take home more money. So you might decide that you'd rather have the leisure time. So you work fewer hours and then you end up taking home the same pay as you did before, but you're working fewer hours to get that pay. So that would then mean there'd be less tax revenue if that was the case.